Hey, good morning. This is Meir Valensky with Driving Markets. Hope you're all well. Good morning. Okay, quick warning in advance. Anything said in this piece is an opinion only. It's not investment advice, not financial advice. It's purely a media broadcast. Everything to do with your account is your money, your trading. You invest, you make the money, you lose the money. I have nothing to do with it. And it's just there to give you a little bit of flavour to financial markets. Okay, so let's go. So Friday, the markets in the US and Europe and the UK closed up. Why did they close up? Because there's still a follow-on from what happened last Wednesday. Last Wednesday, the Fed raised interest rates by 75 basis points, and normally you would expect that to have a negative impact on markets, but the markets were so pleased with the statement that followed from Jerome Powell that they've just continued pushing up asset prices across the board. So you had the equity markets go up, you had the dollar go down, because the dollar is really a safe haven and a place to go to in times of crisis, and you also had bond yields go down. Bond yields go up, prices go down. So what exactly happened? So Jerome Powell said that they increased rates by 75 basis points, the economy is not going into recession. And the way he flavoured the statement was that the interest rate cycle has come to an end. There might be one or two more interest rate rises, and more or less that's it. The markets loved it, and they think that it's all over by the end of the year. Inflation's under control, the Fed's head of the curve, everything's hunky-dory. Wrong, completely wrong, 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 wrong. I challenged Jerome Powell because from the beginning of the year, the Fed, the ECB and the Bank of England have all had it wrong. They've been behind the curve, they've misread inflation, they've misread the economy, and they've misread the mood on the street. So therefore, when they're saying everything under control and there's not going to be a recession, I don't believe it. What actually happens is follows. The Jerome Powell and the Fed, it's in their interest that they maintain confidence in financial markets, because if they come out and tell the real true story of what's going on, then people will go into despair. So you've got several factors regarding inflation the economy should take into account, which I don't think the Fed are really taking into account. Number one, it's a continuing war with Russia and Ukraine, the macro geopolitical situation, and that potentially could expand to other states. If it expands to other states, you're going to have major shortages around the world. In addition to that, you've still got the supply chain issue, which won't be solved for the next earliest 2 to 3 years. So you're going to have inflation here based on a supply-driven model over the next 2 to 3 years, because there's no supply coming in there. And by no supply coming in there, it looks like demand is super high. But not only is demand super high in its core, it's also super high as a result of lack of supply. So you've got a double whammy there. And then you've got overall labour. Now, labour market is very, very tight globally. Even though there's been layoffs in the high-tech sector and other sectors, there's still the labour market. There's shortage of labour due to corona, due to people changing their vocation, changing direction, not going back to work, a lot of deaths, long-term illness. A lot of factors are involving the whole labour shortage issue, as can be seen on flights, baggage handlers, and suitcases getting lost or be delayed around the world. So going back to the economic situation, what we've got this moment is we've got Jerome Powell and the Fed saying that we're going to be either soft landing or no recession. Well, that's not going to happen. I mean, just last week, Intel, the semiconductor producer, dropped 11% in one day by missing analysts' expectations. The analysts are lowering their expectations across the board, so when the corporates do come out to produce results, they can beat analysts' expectations, because the analysts have lowered it to such a level that it's very hard not to beat. However, Facebook failed on its expectations last week, analyst expectations, and the shares dropped in one day 5.6% or 5.8%. As I said before, I think Facebook is on the way down. Amazon was interesting. Amazon came out with a $2.2 billion loss in July 2022. In July 2021, came out with a $7 billion profit. So that's a $10 billion turnaround on Amazon, yet the shares went up. If you were investing in a company that was losing $2.2 billion, would you invest money or would you pull money out of it? Well, that's a really, really good question. And looks like the hedge funds and the investment funds bought into Amazon probably to keep it up and pump it up in order to get out a later date. I'm not too sure if the corporates can maintain the pace of their profit reporting or the profitability where we're at within the economy, because there is definitely a drop in demand. That's number one. Number two, there's a drop in supply. And And number three, the expenses that the companies have got now in order to run the business are far higher than they were a year ago due to inflation and the cost of production and the cost of delivery across the board. So those are the things that you need to take into consideration when you're trading and when you're looking overall at macroeconomics. As regards FX, if you can look at the dollar, look at the dollar pound and look at the dollar euro. The dollar euro is probably going to go to 1-on-1 on par. It's just that's the direction it's going to. Bitcoin went up to 24,500. It's come off a bit, it's down to 23 and a bit. So that's going to pull up or pull down the crypto market accordingly, because Bitcoin is the flagship of the crypto market. So overall, I do expect inflation to come off slightly over July, August, and then September to start rising again. I think the interest rates will go up as faster than anticipated, and I don't believe anything that the Fed says. Simply, that's it. Okay, this is Mayor Valensky, Driving Markets. Have a good day.